The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 30th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, folks, that is something we must master each and every day. So let's begin with some empowering beliefs. And, yesterday, the Bears, they actually took over the ball in the game of the stock market out here. So we're going to start the day off with some inspirational, empowering football quotes. The first one comes from Vince Lombardi. Actually, the first two are going to come from Vince Lombardi. The first one goes like this: the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but rather a lack of will. How true is that, folks? How about this? His second one. Once you learn to quit, it becomes a habit. Oh, man, I think that is right on. That's why we say never give up. You fall off the horse, get right back up on that horse. How about this one from Jerry Rice? Today, I will do what others won't, so tomorrow I can accomplish what others can't. How about that, coming from one of the best receivers out there? And then finally, the last one here from Lou Holtz. He says, ability is what you're capable of doing. Motivation determines what you do. Attitude determines how well you do it. Folks, success leaves clues. That means we can find them everywhere. That's why I want you to understand the patterns in the marketplace when we're taking a look at the stock charts. I want you to understand candlestick charting for sure, because that is giving you the message. That's giving you the trigger systems out there to go ahead and go long, go short, whatever it is you might do. That's why I want you to understand how to read the message of the market. So let's go read the message of the markets. Right now, we've got the Dow is trading up 45 points at 15,567. S&P up 5 points at 1690. Composite up 16 at 3615. Russell 2000 up 4.5 points, trading out at 1045. Google's up $1. Apple is up 494. It's got an A to B equals CD, a confirmed A to B equals CD up. Microsoft up 16 ticks. Intel up 14. Cisco up 49 cents. Leading the charge to the upside here this morning is Chart Industries. It's up a nice 13%, $13 and change. Agerian Pharmaceuticals, not sure I've got the name right there, up 837, that's up 10%. Cognex Corp, CGNX, up 15% this morning. Commvault Systems up 782, Apple up 480. Carpenter Technology, CRS, up a nice 10% this morning, up 480. Vertex Pharmaceuticals up 466. To the downside, Compass Minerals, Mosaic, Potash, Intrepid Potash, just getting crushed. Down 30%, 20%, all over the board out there. I guess the news behind that is, let's see here. The news is an entity, Russia's Uralkali, don't know if I pronounced that right, pulled out of a venture with its potash partner in Belarus and expects the move will cause global prices to drop by 25%. Well, we are seeing prices drop like a rock. Like a big rock out here inside those equities. We'll take a look at those as well. Also moving to the downside here, you've got Coach. That's off 8, almost 9%. Xylem, XYLEM. That ticker symbol is XYL. That's down 15% this morning. 3D Systems off about 9%. As I recall, that was up yesterday. Stratasys off about 3.5%. We'll go check in on those 3D software and hardware makers out there, see what their stocks look like. Let's first start off by taking a look at the S&P 500. Let's get over to our daily indexes. Start off and take a look at what it is that is going on inside the marketplace. Right now, the S&P 500 is traveling above. It's traveling above that May 22nd high. 1687.18 is the number. Yesterday closed just slightly under it on lighter volume. Yesterday's close at 1685. We got one of the signals that we were looking for. That was in the S&P 500. That was going to be one of the signals to look to determine who was in charge of the ball. on the football field. So that gave us a signal that it was the Bears, but it needed more than just a close below that May 22nd high, because we've had price traveling, hovering around this area ever since July 18th out there. Right now, it's trading at 1690. The second thing that we are going to be looking at, we are going to be looking at the New York Stock Exchange. I'll go ahead and pull that stock chart up here. That was going to be key. We needed net declining issues yesterday, I believe, of, what was the number, like 93? Well, we more than accomplished that. We have the McClellan oscillator down below the zero mark. When it gets below zero, that tells you who's got control of the ball. And it is the Bears that have control of the ball. It is first down and 10. That means today is the first day for us to see what they are able to do with the ball. If you are long and you are strong, I'm telling you, make sure you have stops in place and make sure you tighten up your stops. Of course, it depends on what style of trader that you are, what time frame of a trader. But if you're trading off of daily charts, well, then I'm telling you that you ought to go ahead and tighten up your stops. Look for some high volume bars, because that certainly is the first place where something will move down to. That's our markets, which will move down into that June 20th to June 24th level out here. New York Stock Exchange gave us the big signal here that the Bears took control of the ball. If we go back over and take a look at one of the other elements that we were looking for, well, that was in the VIX index. We did not get that confirmation yesterday. What we did get, though, was a close yesterday. The close from the prior session, July 26th, that close was at 1272. Yesterday's close was at 1339. So we did see price move higher. It has not gotten back inside that little trend line that it broke through. It broke through that trend line on July 19th. It's trying today again to get back inside there. That price of when it gets back inside that price range is probably, 1350, 60, something. Well, it's not 1350. It's a 1346 right now. Maybe it's about 1360 or so when it gets back inside there. The real fireworks begin when the VIX index gets above the 50-day exponential moving average. That is a level of $14.63 as we speak right now. Boy, you see it get above that level. Be careful, folks. So we did get several signals yesterday that the Bears actually took control of the ball, and today is day one, so we need to see what happens. Another area that we were taking a look at yesterday was in the SOX index. In the SOX here, what we did see was a close below the hammer candle. The hammer candle low out here, which was from Friday, was 470.47. I had a little trouble saying that yesterday, but that was the number, 470.47. Yesterday's close out here was at 469.97. You break a hammer candle, that is a bad scene. Yeah, we're seeing a little bit of a pop out here this morning. That still is a bad message out here that it broke that hammer low. That says that we should see the SOX, the semiconductor sector, we should see the SOX index itself go ahead and make a move down into that June 24th area. That hammer candle was broken. Nice looking candle here today so far, but we'll see how this day ends up. So we got a number of the signals that we were looking for. Now, as long as we're in the index area, let's go take a look at the rest of them. Then we'll go switch over into the ETF structure for you. Let's look at the Russell 2000. The Russell 2000 being the leader on the move up, and it was the leader yesterday on the way down. So there's another signal that the market is a bit toppy here. And in the case of the Russell 2000, our normal expectation would be for it to move down to the 1,823. That's the May 22nd high. I suspect that's where we'll get a release of information as to what the Russell wants to do. Now, if you go from the swing point low or the A to B equals CD up that it completed out here, and that would be your price level, your swing point of April 18th, all the way up to the high that was put in on July 23rd. Your 0.618 level is 958.93. So if the May 22nd level doesn't hold, that is probably where it's headed to, which will take you right to the top of June 24th. So that would say that would be quite a fall. That would be the Russell getting down there, and that would then communicate to us that we would see the S&P 500 and the Dow actually take out its June 24th low, or likely take out the June 24th lows out there. So that's how we would put that together. If we go take a look at the Dow itself, as soon as I can find it here on my screen, we've got the Dow is traveling just slightly above May 22nd's high. That number's 15,542. Again, another day of a small-bodied candle out here. So it tells you that the market is just simply tired. It is tired. It doesn't have the strength. It doesn't have the energy to make it over. It's been trying to recharge its battery. Looks like it's been drinking Gatorade, Kool-Aid. Well, we know it's been on Kool-Aid with Uncle Ben, who, by the way, I guess he's out tomorrow at about 2 o'clock, and he'll unleash the hounds. The question is, are they going to make a beeline for the June 24th area, or is it going to be a new breakout? So 2:15 tomorrow. Stay tuned during David White's show, and we'll get a pretty decent feel for what the market decides that it wants to do. Right now, the indication is that the market is ready to move back into that June 24th area. Let's see. How about the NDX 100? That is being powered most certainly by Apple, still the largest weighting inside the NDX, and Apple does have a confirmed A to B equals CD up. And what does that mean? It says that the NDX could also make an A to B equals CD up. It is up above that May 22nd level, and if in fact the NDX can take out the high from July 17th, 3090 out there, that will set up a move to 3147. It's at 3085 right now, so that would be a about another 50, 65-point move or so out there. We'll see if Apple's got some folks that are going to follow along with it. And let's go take a look at Apple as long as we're talking about it and talking about the NDX 100. So as we look at Apple, we can see that Apple is got a confirmed A to B equals CD up. And what do I mean by that? Well, if we take a look at our 8-point, that's going to be the swing from June 28th. That low out there is 388.87. The B point on this equity is going to be right up at July 18th. That top, 434.87. Now, the volume on that bar is 7.8 million shares. It gapped up above it with volume. That's wide price spread, accelerated volume. Did it on July 24th. That gave it everything that it needed in order for it to fuel itself up to the 464 mark, and that is where it is headed. It's at 452.81 as we speak. Now, here's the thing. The reality is that it's more likely headed to 477.63, so we'll see as it gets up above 465 whether or not the 200-period exponential moving average, which is at a price level of 468 and change right now, whether or not that will actually hold things in place. But it does have the markings of a move that wants to get back to about the 477 mark out there. That would make sense as well because that's the swing point going back to February 11th, last time it made a high, getting inside the gap, actually testing the gap of the breakdown that this thing had. Well, it didn't close the gap, I should say. It got back to the swing point from January 15th. That low out there was 483.38. So 464.75 certainly on deck in the cards for Apple, but it looks like more like maybe 477.22 is in its future. Let's go take a look at the ETF structure, see what we've got going on out here. Let's start off with the Qs, just as long as we were talking about Apple and the NDX 100. The Qs here, if in fact they can't get above that swing point, doesn't have a lot of volume, 24 million shares on July 17th. That price level is 75.74. You get above that level. Now, the Qs do not have a confirmed A to B equals CD up. It's only Apple that does. So we'll see if Apple's going to make the move, but the Qs cannot. But if the Qs do, 77.23 would be in its future. 877-927-6648. Dow's up 42. S&P is up 5.5. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 53 points right now. S&P is up 6. Let's continue on, finish off the ETF structures. Let's start with the IWM. IWM right now trade out at 103.78. It's on its way back into the swing point high from May 22nd, 100.38 out there. You know, completed a 1 to 1A to B equals CD up. Completed a 1.618 butterfly sell pattern. Gave us some reversal candles out there. Volume yesterday on the move down, accelerating a bit, 30 million shares to the downside. The May 22nd swing point that it got over with light volume should be the first test. That had 68 million shares down there. So volume is accelerating as that level is approached, which is 100.38. That would be very bearish out there, and that would signal a move down into the July or June 24th area, which is at 93.83 to 95.51. But one thing at a time out here. First, we got to get through the retracement, or it has to get through the retracement of its last leg up. The 0.382 area of that is 100.72. That's why 100.38, the May 22nd area, should act as a decent first support range. That's on the IWM. Let's finish things off by looking at the SPYs and the diamonds out here. We've got the SPY traveling just above May 22nd. The May 22nd high is 169.07. It's at 169.16. Yesterday, rejecting that swing point, to the T. The high yesterday was 169.01. Well, it didn't get it. 169.06. Volume-wise was 79 million shares. So far, the volume behind today's move, 17 million shares. Not too bad during the first hour of trading, but it is summertime. That means volume will dissipate here. Let's finish it off by looking at the diamonds, the Dow Diamonds DIA. That is now back up above the swing point from May 22nd, which is 155.14. It's at 155.40. Yesterday was a test. It got up to a high of 155.14. Rejected that area. Only 2.5 million shares yesterday. So far today, 896,000 shares in trading. So volume here is pretty good. But again, that will lighten up here as we get past the 10:30 time frame. Let's go take a look at a couple of these 3D companies out here that were moving. We had 3D Systems. They were out with numbers. I don't have the numbers here handy. Let's just go take a look at the stock chart. Now, yesterday we were taking a look at this equity, and it was moving up into the swing point here. And then we were doing it during this hour, moving up into the May 14th swing point that had 13 million shares, and volume just simply must have died on it because it looked like it was going to be able to have that type of volume at least. Yesterday it ended up only doing 8.4 million shares. Not bad though, because it was pushing into that swing point with accelerated volume. Never got up and tested it. We don't have a test of the high. Let's see if we've got a test and a rejection of the low out here. Well, we will if today, if we see a close below that little doji candle out there from May 14th. That level is 46.55. Right now it's trading just above that. But you do have volume now off of the top. And when this has volume off of the top, if we just go back to the left out here and take a look at its price behavior, this had volume off of its high back on January 28th, 17 million shares off of the high. So if the volume continues to accelerate, you can see that what price did in Triple D in 3D Systems moved all the way back down just slightly below the 200-period exponential moving average. So look for that to be the next area if, in fact, it breaks outside of this swing point from May 14th. If it closes inside, meaning it closes above 46.55, it'll go ahead and make another run for that high out there, which is 51.94. That is on 3D Systems. SSYS, I believe, is the other one. I think is SSYS and XONE are the other two out here. So as we take a look at SSYS, it's not doing too badly today, pulling back, but only 281,000 shares. This thing here made a high out here with 788. Well, I guess 280,000 shares is not necessarily that good for 1 hour of trading out here. But so far, we'll have to see how this ends up the day. It does not look too technically damaged. The other one, X1, I believe, which is kind of a more recent IPO out here. This is pulling back, but volume-wise doesn't look to be too shabby out here. This does have this high volume bar from the actual IPO date. If it does ever fall out of bed, 27.25 is where this would head to. It's at $63 right now. It'll have a little bit of support right here at this bar going back to May 15th, which is 45.80. So 45.80 ought to be the first level of support if this thing, and you'll know it'll head back there if, in fact, it breaks the lows of July 16th, which is $55.50 out there. Currency-wise, we'll peek in here on the currency pairs. We'll spend some more time when we come back from our next break at that. We'll take a look at the euro. We'll start off with the queen. The euro here yesterday did form a bearish engulfing candle. We have a little bit of follow through today out here. Although it started to pull back, it's going to need some more push down before I'm a believer that it's basically what it's got to do. It's got to get below the level of 1.31995, and then I'll be a believer that the euro is ready to make its run down to the swing point low from July 9th. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Light sweet crude back 1% right now, off $1.09, trading out at 103.49. We've got the September contract up on my screen. We can see the perfect 1 to 1.272 A to B equals CD up pattern that it completed. That was coming off of the April 18th low, 86.26. Then the high out here, the B point on this is going to be June 19th, 99 and a quarter. Pulls back, makes less than a 0.618 retracement, it looks like. The swing point being June 24th out there, 92.61 to 1.272, 109.13 was the price projection. It actually got up to 108.93. Now what we are seeing is we're seeing the retracement begin here. The first area, dead cat bounce of that A to D move out there, takes you to 100.27. That is where light sweet crude should head to before it gives a release of information to us. Now, when I say 100.27, $99 works as well, because that is really the top of the consolidation range, the 14-point consolidation range that it broke out of. So that's what we should be looking for, is for light sweet crude to get back down and test that area. Let's go check in on one of my favorite currency pairs and yours, and that is the Euro-Japanese yen. Euro-Japanese yen on the 120-minute chart, that's what we're looking at right here. Beautiful patterns. The most recent one was the 1.618 butterfly pattern that it completed. Now what we have seen is the first move. Well, you've seen the expected move down. It sliced right through the first move down, which was 0.382. The normal place for any move on a butterfly Gartley pattern or Gartley pattern is a 0.618 level. Same thing on an A to B equals CD, which is part of the Gartley or butterfly pattern. In this case here, it made that move very quickly, getting down to 129.84. It's the 120-minute chart that we have up on my screen here right now, and you can see got into the extreme oversold condition and really moved sideways for quite some time in order just to work that condition off. Then in overnight trading last night, just as Asia was coming online, right about 9 o'clock, it moved off of that 0.618 level. Not really, it made enough of a move to now have worked off the oversold condition. What does that set up? That sets up that the Euro-Japanese yen can now begin to make its run down to the 129.09 or 129 even level. That would be your 0.786. But really, if all that the Euro-Japanese yen had in it was the move last night, this is setting up a huge move down. Let's go take a look at it, and then let's try to see what pattern that would set up. First of all, if we take a look at coming off of the high to the low that came in here, you'll see it wasn't even a 0.382 retracement. So I don't know that this is the extent or the end of that move. I mean, I could easily, well, let me put that back up on the screen and show you, a couple different things that we could take a look at. Let me go ahead and get rid of this one right here. So we'll just have as few lines as we can on my screen. So this is one possible play out here, is that right now all it's doing is forming a small A to B equals CD up. That would take you to the 0.382 retracement, and that is a more likely outcome, in my opinion, that you'll see it get up to about the 130.78 level. That would be your dead cat bounce coming off of the swing point high from 9 a.m. on July 24th all the way down to the low that came in on about 3 o'clock in the afternoon on July 29th. So to be that A to B equals CD, the small one that we're looking at, that would give you the dead cat bounce. But it doesn't have to. If all we see now is less than a 0.382 retracement, instead what it's really doing, oops, I didn't mean to grab that tool. Instead, what it's really doing is making the A to B equals CD down. This will be a stinger. Even if it, look, folks, even if it makes the A to B equals CD up and gets to 130.78, it still will be a major A to B equals CD down if that's the pattern that it's setting up. That says 127.36. Oh, man, why did I do that? I didn't want to do that. Let me redraw that again here. Thought I had that anchored in, and it was not. So there, now it should be anchored. There we go. Now we'll pull this back here. Now, the pattern that it would be setting up would be more than the 1-to-1 A to B equals CD. Maybe take it down into the 126.5 level. But let's take a look now at the larger pattern here, coming off of the swing point low, 11 o'clock in the morning, June 13th. All the way up to the high that was put in here recently back in July 24th. And what you'll see at that 1 to 1.272 A to B equals CD, what you'll see is the 0.786 retracement. That would actually set up the next Gartley buy pattern, longer-term Gartley buy pattern on the Euro-Japanese yen. It would look probably something like this, but we'll just have to wait. Not exactly the best with regard to the wingspan out there, but we'll just have to wait and see if that's, in fact, how this pattern plays out. What we do know, and that's important, is that the oversold condition has been worked off, and that gives it the freedom to go ahead and run to the downside. Why is that important? Because as goes the Euro-Japanese yen, will go our markets eventually, because it is the currency pair that wins out, and is this currency pair that leads the way down. Let's go check in on the commodity sector. We looked at oil. Let's take a look at Goldilocks here. Gold pulling back a bit, down $6 right now, trading out at 13.22. Now, this is a cool chart. This is the weekly chart for the gold contract. And, that nice little bounce that we've had in gold so far, when it made its way up to the high so far at 13.48. I listened to some people on the television, and they were talking about how the move behind gold, that was the biggest short covering rally that they had seen. Folks, I'm here to tell you nothing could be further from the truth. All you got to do is go back and take a look at the facts. And the facts are this. The Commitment to Traders report, which comes out on almost every Friday at 3:30 in the afternoon, just depending on holidays out here. Well, if you go take a look at the non-reportable group, that's what we've got at the bottom of my screen. They are still at their highest historic net short position. And this was as of the close of business on Tuesday, and we saw that rally take place. Before on Tuesday as well. So let me tell you, we have not begun to see the short covering rally that will be historic when gold makes its next move higher out there. So it's got much more room to run because you've got the commercials. That's the top portion of my chart. They're still at their lowest net short interest. So we've got a historic bottom that has been, my opinion, that has been put in inside gold. Now, we'll really know if the bottom is put in when gold gets above this red line. Now, it's a weekly chart that we're looking at. It is a 40-week, which is the equivalent of a 200-day exponential moving average. So that price point will take you to about the 1369 mark as we speak right now. It's at 1322. You can take a look at this and how the 40 period, the 200-day exponential moving average, has basically held gold in place ever since October of 2012. So nearly a year out there. There were a couple of periods of time where, really one period of time for about 3 to 4 weeks where it was above the 200 period or 40-week exponential moving average, and that takes us back into November of 2012 all the way up until November 8th. So it's just the month of November in 2012, basically. So gold has got a lot more room to the upside. But first, what it's got to do, it's got to contend with its break from the U.S. dollar index correlation. And at the moment, that really has not happened just yet. If we take a look, here is the daily gold chart, the black line on my screen. It just happens to be just the euro U.S. dollar. And you can see from a directional standpoint, and that's all that you can use to measure this on. You can't pay attention to where the lines are at on the screen. They're on two different axes. One's a $1,322 instrument, and one's a $130 instrument. So you can't be taking a look at that. You can only use this from a directional standpoint. We're seeing gold pull back. We're seeing the euro U.S. dollar also pull back a bit as well. So it says that correlation between that currency pair is still in effect here. But what we want to really be paying attention to is as the euro moves back, let's assume that it does and it continues to move back, is how does gold really react? And if we start to see gold just kind of pull back nicely out here, boy, that sets up the mere fact that the correlation probably does eventually come unglued. And when we do have a short covering rally, it'll be a big one. It'll be a doozy. It'll be a 100-point plus move or so. It won't be a 60-point move inside gold. Let's take a look at high-ho silver, and silver really shows the same things. I don't have the charts up on I don't have the commercial commitment traders data up here, but basically I looked at it, and it's basically got the same message out here. But gold is the one that has got the better-looking stock chart as we speak right now. How about light sweet crude? We already looked at light sweet crude. Let's look at bonds and then natural gas out here. Bonds will, I'll consider taking a long position in bonds if they can get above that July 5th candle, 136. And if it gets below 132.04, I would consider taking a short position. Right now, traveling sideways doesn't give you a ton of information out there other than it's just simply consolidating. Now, when you consolidate, you typically end up going in the direction that it came from. I would say, well, geez, bonds may want to go lower out here. Maybe bonds are just waiting for Uncle Ben to give him some news tomorrow at about the 2 o'clock time frame. If we take a look at natural gas right now, it has formed a 0.786 Gartley buy pattern. It did that yesterday. We took a look at that. The danger, Will Robinson, is this. It formed the D point. The A to B equals CD. All a Gartley is an A to B equals CD in the opposite direction of the trend that it was coming from. In this case here, when you make a D point and you gap into it, that is a danger sign. That says that, you know what, maybe instead of just making a 1 to 1.272 or whatever A to B equals CD, let's go check this out here, see what actual kind of A to B equals CD pattern it formed here. It says, you know what, I may want a lower price. Well, it made an exact. How about this? We didn't check that one out yesterday. The 1 to 1.618, A to B equals CD, $3.42. The low yesterday, $3.41 out there. So you got to like that. But when you gap into a D point like that, it's saying, you know what, it wants lower price. And lower price will make a 100% move of a move and take you all the way back down to the February 18th area, right around 313. So until the bulls show up, and even if they do show up, what they've got to do is they've got to crush right through this gap up, because the resistance now has been established on the natural gas contract at about 354 out there. Maybe it's even a little bit lower. Maybe it's just simply the top of yesterday's high, 352. We won't know until we see a move up and until we see that area tested out here. And that is on the continuous contract for natural gas. Let's go check in on a couple of our core core charts out here and see what we've got. You know, we had a call, so we took a look at Apple, but in the first show, John from Concord, Mass., and he was asking about Microsoft. I'll go back to the Microsoft chart here, and he had a great question, which was just simply from a technical perspective, what does this volume off of the highs basically mean? The volume on July 19th, 248 million shares out there. And, you know, that typically says don't get in the way of that freight train out here. But what I did during, I think in between the two shows, I went back and was looking for other events where we saw Microsoft with volume off of the highs. Now, I believe I had to go all the way back to I didn't want to do that. I had to go all the way back to 2000, to its highs in 1999. And so I'm going to go ahead and pull back here. Now, Microsoft made its high. Let me pull it back out here. Give me a moment here. So if you're watching on Tiger TV, there we go. So the actual high came in Microsoft on December 30th, 1999, $59.97. Now, the very first time that we saw volume off of the high, similar, John, if you're still listening in to what we just saw recently, well, this happened here on April 3rd of 2000, 262 million shares with that kind of volume off of the highs, and this continued to move lower. Didn't make the same beeline on the way down as it did on April 3rd out there, but it did continue to move lower. So we'll see if that same pattern of behavior is out there for Microsoft as well out here. So just went back and took a look at the last time that occurrence had taken place. So it had been a while out there, and that was inside Microsoft. May not be setting the best of news here for the markets. Let's take a look at ExxonMobil. ExxonMobil right now trading out at 93.78. Now ExxonMobil has been traveling in a 7-point sideways consolidation range for the last year. Broke out of it with some nice volume. Did that on July 18th. There was 10 million shares. Yesterday came right back to test the consolidation high. Yesterday got down to a low of 93.61. Volume 8.8 million shares. So 8.8 million shares going against 10.5. You know, it was lighter volume, but it wasn't like it was half the volume. So today it looks like we're maybe setting up another test, or it's setting up another test, and maybe trying to get back inside the range. If it does close below, let's give it the number here of about 93.50. Let's see, about 93.50. If it closes below 93.50, could be 93.60, 70, something like that. Then you'll have ExxonMobil back in the lower part of its range. And if it couldn't bust them up, it'll go ahead and try and bust them down and move all the way down to the $85 mark, maybe 84 something and change out there. So that's on ExxonMobil. You want to be paying attention to ExxonMobil as well. No volume off of the high, but actually looks like it could potentially be a false breakout up there. Let's take a look at Google here, see what we've got in place for Google. Look like Google may try to make this nice 3 drive to a top pattern. That would come in here on August 2nd, a few days from now. So it doesn't look like that's the pattern that is going to unfold inside Google. So let's just go ahead and get rid of it. Let's get rid of that as well. Instead, right now, what we've got Google doing is coming back and pulling back into that hammer candle from June 6th. The top of that is 866.33. Volume there, you know, nothing real substantial, 2.5 million shares. And this thing had gapped down here recently back on July 9th. Now, this was the earnings date, which was July 19th, and it's very possible that the highs for Google have been put in for a while. In fact, the earnings day, Google is probably one of the most consistent equities for being able to identify. Now, the probabilities are high that the price behavior after the earnings day is the price behavior that you see really until the next earnings cycle. And what did Google actually do on its earnings release? It moved down. Yeah, it came back up a bit, but looks like that maybe the high has been put in for Google here for a while. Right now, the Dow's up 42 points, S&P is up 5, and Steve O'Sun will be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 49 points right now. S&P up 6. Let's take a look at a couple of these equities here. Still moving in the market. Coach was out with their earnings. Their ticker symbol is COH, gapping down with some volume here. Volume so far today is 7.2 million shares, taking out a little hammer candle. Low, that's not a good thing. From June 24th out there, that low was 53.79. Now, this thing has been a wackadoo stock. It's had a nice little breakout here. Of course, that breakout that we were looking at from April 23rd, in essence, was breaking out into a breakdown here, and this breakdown really coming in with big volume, 50 million shares. That is on January 23rd. And as you take a look at what this equity actually did, where this thing broke down from, I'll go ahead and draw a black line across my screen out here. That was from the bottom of the session on January 22nd. The low was 59.86. The volume there was 6 million shares, but remember the benchmark here, truly 59 million shares. It gets back up into that area with 4.6 with 2.9 million shares with 4.2 million shares. Not enough to bust it up, just enough to get back into the area where it broke down. This would be selling that breakdown, and in fact, that's what it's doing today. It's continuing to break down further. Where is this going to run to? Well, most certainly it's going to run to this last area where it broke out of, and that is going to be April 22nd. So expect it to test the high of 51 to 45 out there. The benchmark here today is going to be critical. It's 21 million shares. 20 million shares was the move up on April 23rd. So far in trading, 7.3 million shares. So if volume keeps up at this pace, that's not where it'll stop. It'll move all the way back down to the bottom out here, right around the February 26th time frame, around $45.87 out there. The potash, Mosaic companies just truly getting slammed today. If we take a look at the volume, let's put this here as Mosaic, or potash, I suppose is how you actually say it. If we take a look at the daily chart, very nasty looking, 53 million shares to the downside. Don't know if it's ever done 50. Yeah, it has done 53 million shares here. It actually broke out back in August of 2010 with 51 million. No, hold on. Let me go back here. I didn't get the right number. With 142 million shares, August 17th, 2010. But this thing is looking pretty bad out here. That is on potash. So let's take a look at what is it that you're looking for today, just as I do now every day. Here's what you've got to be paying attention to. Number one, I gave you the numbers and I gave you the charts to look at yesterday. We know we had a hammer candle inside the SOX that was broken. The S&P closed back below the May 22nd high, and most importantly was the New York Stock Exchange, which gave the official changeover of the ball to the Bears. Today's the first day for the Bears to start their play, so it is today. If, by any chance, the New York Stock Exchange would have net advancing issues of more than 1,129, well, then the Bears will have thrown an interception or a fumble or something like that. But otherwise, it is the Bears who have control of the ball, and that means be cautious out there, because you see follow through today, and we know that we've got volume down at that June 24th area inside all of the ETFs, inside all of the indexes out here. June 19th, June 20th, right around June 20th, June 24th out there. There's volume to the downside that needs to be tested. We know when things get thrown out of bed, that's where they move down to. So be paying attention to the market today. The key, there's only really one thing you have to pay attention to, because everything was done yesterday, and that's going to be your net advancing issues. And if you're anything less than 1129, the Bears have the ball, and they will try to advance the ball down the field out here. It's pretty simple. It doesn't get really complicated out there when you start taking a look at the May 22nd swing point, when you take a look at a hammer on the Philadelphia semiconductor. It's not a bullish market if you start breaking hammer candles inside the semiconductor. It's just index. It just simply isn't. Stay tuned, folks. Basil Chapman will be up next. And we've got the options hour from 12 to 1. Daryl Martin 1 to 2. David White 2 to 3. Andy Heck from 3 to 4. It's a full lineup today. And he is the warm-up band for the Tom O'Brien Show. Have a great Tuesday, folks. Look forward to seeing you tomorrow morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.